The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. The Power Trading Hour, the koala bear of Wall Street. No wolf here, just all nice and cuddly. We've got a market that is moving. And isn't that nice? We've had a market that hasn't really given us the kind of volatility as a trader we would like. And starting to see at least a little bit of that. When we look at the S&P cash, it's off 12 points. Of course, much lower earlier in the day. We're getting a little pop. The question is whether they're going to sell into the weekend, into the close, excuse me. I'm already thinking about Friday for some reason. At this start of the day, normally we have about 1.6, 1.7 billion shares on the New York Consolidated Tape. That is all the New York Stock Exchange and Amex listed stocks, whether they're traded on the ECNs or on the trading floor itself. So that is everything that could conceivably be traded. Dark pools, everything. With 2 billion shares, that tells us that we've got some fairly decent volume as we go on into the day. And we'll see how this develops, and we'll check back in. But normally this is a good time to start watching and seeing whether, volume tends to kind of taper off about this time of day. And if it doesn't, that's probably going to tell us a lot. Of course, the last 30 minutes is going to tell us a lot also. 2 days of pulling back. I can just see the people yelling and screaming and the gnashing of teeth. Dogs living with cats. This is just not allowed in this stock market. Maybe one day we can pull back, but not 2 days. So we'll see whether this happens. I think many times we see a market that no one believes can pull back. It always does. And, of course, like a rubber band, the more you stretch it, the harder it flies when it breaks. And we're watching for that right now. But I have a lot of non-believers. Everybody's been rewarded if they've bought every dip before, and no difference today. Most of the talking heads on financial infotainment saying that. It is just buy the dip, buy the dip, buy the dip. And that works until it doesn't. We've seen people go after exuberant markets before, and the problem is it's very tough when you get in that mindset to ever sell. Just make sure that you have at least a mental stop in of where you will not want these stocks to go any lower. Of course, the VIX is very low, and you can buy downside protection with puts fairly cheaply even after today. So why not buy a little insurance on that beach house? That storm, those storms, they do come. So as we start today, for those new listeners that we may have picked up from our collaboration. Can I say that? No, I can't. Can't just for some reason having a tough time saying that today. But anyway, our friends, that's a much better way to say it, our collaboration. I guess I just had to think about it for a second. Our friends at eSignal are picking us up today. So we're going to have a much bigger fan base out here. I know Team Dave out there, I get emails from you. But again, you can give me a call at 877-927-6648. You can post a message in our trading den, and you can, of course, email me at path@tfnn.com. That's PATH at tigerfinancialnewsnetwork.com. And I'll answer your questions on air. Not with an error, but on air, AIR. Anyway, we've got a interesting day. Of course, we'd like to start off our show in the afternoon with a little bit of history. In this day in 1932, in the icy grip of the Great Depression, the Dow Jones Industrial Average closes at $41.22, its lowest price since June 1897, on a total volume of 720,000 shares, which we get about every minute today. So, is it? And, of course, if you like history, you can always check out Jason Zellwig's website, where I find this financial news every day. Probably the biggest news outside the pullback in the markets today is Microsoft. It will be ending free mainstream support for Windows 7 on January 13th in 2015. Not that far away. Businesses that pay for extended Windows 7 support, as most of them do, will be supported for yet another 5 years until January 14th, 2020. But what this tells us is that Microsoft's getting back to its roots between 1984 and pretty much 2000, which is constant and never-ending improvement. Of course, they need to work very hard at getting caught back up to operating systems with NUIs, that's natural user interfaces, touching, feeling, talking, and they have a lot to do. But 8.1, of course, the current operating system, but just after killing Windows XP this year, I think that they've seen just how much they can get by moving people up to current operating systems. Certainly they want to add a few features and move them into 8.1 so they have a consistent operating system across phones, tablets, and computers. Interestingly enough, Dell came out today and talked about how they think that they can rise back up from the ashes into a huge supporter of Windows 8 tablet technology, as some people are calling these the ultra portable. And I have to tell you that third version now of the Surface is a rocking machine and worthy of anybody, including Apple, for making one of the super lightest, with an i7 style processor if you want it. Huge amounts of memory, fast SSD drives, with just about all the features and a decent keyboard. So I have to say, not too bad. I want one very badly. But already the 7-year itch on Windows 7. Keep an eye on it. I'm already working on upgrading to Windows 8. UK production numbers came out pretty bad, and everybody, I think that we really started seeing the real weakness in people selling after these numbers came out, or at least the decision to. Total production decreased by 0.7% between 2014 and May 2014. Manufacturing was the worst hit, down 1.3%. But Germany and the UK had been kind of the sources of strength in Europe and the UK zone, or the Eurozone. That the UK is showing a little bit of pullback without the kind of bad weather that we had, suggests that maybe this is more than just a weather issue here in the United States. Of course, we're all aware that robots can take our job at any time. Of course, Skynet became self-aware, in early August of 1997, if you're a Terminator fan. And, of course, with 20 days, it learned everything in the world and decided to start firing missiles at us and blow up the world. And, of course, if you're a big Terminator fan, that's the legacy. Of course, robots replacing workers, nothing new. The largest private employer of all of China and one of the biggest supply chain manufacturers in the world, Foxconn, announced it will soon start using robots to help assemble devices at several sprawling factories across China. This is going to be used pretty much exclusively for the beginning for batteries for the new iPhone 6. But even the price for Chinese worker, which is fairly low, has gone up high enough, and the robots have become cheap enough that even cheap Chinese labor is being replaced by Skynet robots. And I'll stick with my Skynet story out there, even though 17 years later, there still is no Skynet, but certainly scary enough, isn't it? Twitter was down almost 8% this morning. The slide comes on the heels of news that the company once again is making a shift in its executive positions. New global media boss and a new chief communications officer. The one single critical problem with Twitter is that its product has no ownership. It's very tough to know who actually has the reins of power at Twitter. What they need to do is give one person total autonomy and responsibility for the product and let it know where it's going. Right now, the biggest problem Twitter has is a horse designed by committee, and it's continuing to be problematic for investors of Twitter for them to find a direction for a product that's fairly decent. But, of course, they've been hammered on that. But right now, I don't think any of the problem with Twitter's issues couldn't be solved by a decent CEO that would take charge and ownership of its mass product. And, well, what can you say? Chinese hackers and Iraq. The Chinese hackers are after Middle East experts here in the U.S., in the U.K., and hacking as much as they can into computers in Iraq themselves, taking a diversion from hacking our major corporations every day. But anyway, a huge... I kind of wondered whether or not the Chinese would get involved militarily in Iraq. They have a huge amount of investments, especially in southern Iraq. They get a lot of oil from there. But this is the first sign, other than a few military officers going in and protecting their installations, which really haven't truly been under severe attack since they are all in the southern part of Iraq. But kind of interesting to see that we're getting a break right now so the Chinese can go after the Iraqi people and Mideast experts trying to find out all the news that they can. Just about all the think tanks were attacked earlier last week and into this week by a company that is a cyber security firm that works with those institutions. It is a mad market. And we continue to be off 12 points on the S&P cash, closing in on 2.1 billion shares.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Oh, we're going to start looking at some charts here. Kind of nodded off during that brief commercial break. But I wanted to get back to some of the stocks that are moving out here today. Of course, I wanted to get into solar stocks. So let's get into that here just a second. I needed to catch up on some stuff as I was going to break. Okay, what else do we have? Okay, still off 12 points on the S&P cash. 2.12 billion shares. So volume moving along, but not really slowing down particularly. I did want to get into the stocks that were having the biggest hit today. And as a... well, come on. No, we're not going to have them right at the moment. I wanted to look at a handful of them. So let's take a look at those real quick. First is the Guggenheim Global Solar Energy Index. I'd been thinking of shorting this one just because of the light volume as we came into the upside of April 24th. That high came in at $44.35. 1.2 million shares, and of course, pretty much the highest volume you could get over here on the right-hand side of the chart. Up to the absolute high at $45 on July 1st was 560,000 shares. So not a lot of energy as we came back up here, tried it again, rolled over, and of course gave about half of that downside back today. But one of the more, how can I say it, significantly weak sides of this market. And unfortunately, I'm having some breakdowns of my internet right now. We're having some pretty heavy thunderstorms right now. Okay. Anyway, wanted to look at that. The one thing, though, is I wanted to see the XLE also really start to give it up today. And it had a little weakness out here, but really didn't bring the heat. But, of course, solar stocks move a great deal more than the actual energy itself, at least the energy sector. In the XLE, you would have liked to see a little bit more volume. We're into this high-volume candle day of May 24th. And, June 24th now, isn't it? Yeah. And we are trying to hit that bottom, but not finding a lot of people willing to sell, probably with all the problems in the Mideast. But it is an interesting move. One of the other sectors I wanted to look at here, maybe this thing is going to work now, was the airlines. There we go. Wanted to check and see if we had any real movement back in the airlines today. Pretty much all down. JetBlue, the worst, down 2%. Love LUV, of course, 1.88%. Let's take a look at JetBlue, JBLU, real quick. And maybe by that time, my solar portfolio will pop up here. And we'll have that. Yep, solar's back, so we'll get to that in just a second. Anyway, the JetBlue pretty much rolled off this top. And, of course, as I've been talking, what you really wanted to watch was for the break below either the 3x3 displaced moving average, which we've gotten, and or it's staying above it. But once we've really kind of started below that, the weakness is going to come in. On when we look at the solar companies, I wanted to look and see JKS Solar, the worst performing, off 7%. I'd wanted to get these short. Really didn't get the opportunity I wanted. But again, really watch either below the 9-day moving average, simple moving average, or below a 3x3 displaced moving average to really find these stocks where they're going to snap and we're going to start getting some volume back in. Jinko Solar certainly did that. It closed yesterday below that average, moving average, and of course that's where you normally see it now, especially this being the time where option market makers go delta neutral. I can see that they might be able to hold this up through tomorrow if the market is going to continue going down. So we're going to watch probably the next 24 hours, probably the most important in the next week or 10 days of trading into options expiration. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And, of course, every day we go to one of our many musical correspondents to check in on the market. Today, it's Freddie Mercury and Queen.
Under pressure. Under pressure.
Yeah, just a little bit of under pressure out here. We've been talking about the solar stocks. Certainly saw Canadian Solar close below this, but these stocks had been up above their 9-day or 3x3 moving average for 10, 15 days. Normally you get a close below them, a little close back above them, and the next close below them is a huge downside. I could see us pulling back over the next few days, maybe going a little higher above one of those moving averages, and then maybe at the end of options expiration, really seeing this market really accelerate down. We haven't had a decent pullback for so long. Most people believe that it is truly different this time. I know it's just one that's stretching the bounds of reality just a little bit farther. SCTY down 5%. Let's take a look. SCTY, Solar City, if I can type correctly. CSTY, he said. Another one that cracked. So you want to be watching all these in the solar area for movements back up to the 3x3 or a 9-day moving average. In fact, I'll put a 9-day on here just so everybody can see it. And same thing. We had to close yesterday. You could have shorted it at the close since it closed below that 9-day moving average. Pretty good indication of a parabolic move in a great deal of these stocks. The way I look at it is just a ton of these high flyer kind of stocks had been out there really doing the short squeeze. You could really just look in the chart and see those short squeezes in anything from 3D printers and stocks that had 30-40% short interest. These are perennially short interest also. Take a look at DQ and see anything else. Most of these have the same kind of pattern out here. Let's look at First Solar FSLR. And this is a little bit different, but you can really see the high in First Solar really getting hammered from that March 28th high that had 8.1 million shares. Twice we've come into that, once with a little less than 4 million shares on April 23rd, and on this one, June 30th with 4 million shares. So you went into that huge move up, and my guess is support probably somewhere around that $55 level. So any kind of ABC move out of some of these solar stocks may be a nice play as we get out here. See if there's a SPWR. Take a look at that SPWR. Of course, probably a little late to be shorting these, but they probably made at least a short-term low today. Maybe they'll pop and get a move back up to 39 or 40 on SunPower. Maybe you'll get the same opportunity for a short play on these. But we had volume. It went down lower. And again, probably going to find a few people buying these dips, but certainly the solar sector, one of the weaker ones out here today. And time to keep an eye on it. These things have broken, so now we're waiting for just an opportunity, probably with an ABC, to get some of these. Some of the other stocks making highs that look like they're going to be closing below some kind of a high. We talked about Expedia yesterday. Not the worst looking stock out here, and certainly not getting huge volume in today, but certainly looks like it could pull back maybe around that 75 area gap without a lot of problems. This thing did go up and test its previous high of February 21st at $81.78 with 2.1 million strain, 2.1 million shares. Went above it and closed above it on July 3rd. Closed back below it. Not a lot of volume. And again, today, not a lot. Closed a small gap on the 1st of July out here. But my guess is this thing probably wants to come back down to that around 75 to 76 level. And at that point, you'd want to look at it. But a lot of these stocks look like it could pull down. They're going to probably pick up a little bit of volume. And then we're probably going to see some small ABCs in these things. And the next one's going to be the next huge move down. Let's take a look at HP. We talked about this one. It is looking like it will crack today. This is Helmerich and Payne. A lot of these, especially these companies that revolve around offshore oil and services, with everybody doing fracking here and fracking there, and frack. I'm going to mix my children's metaphors. Whack a dog or something. What was that? I don't know. Anyway, this thing is really going against that $117 level that we saw on the high on April 24th at 117 bucks. 3.1 million shares. Got into it on June 30th with 2 million shares. Got into it with 1 million shares on July 2nd. So a lot of these showing some weakness and probably a greater trading range in this one down to the 103 or 4 level. Something about the children's thing about patty whack, give a dog a bone. But I'm not exactly sure what that's all about either. Starbucks looks like this thing might be topping out, certainly going into its huge volume high, coming back from March 21st, $78.64, 9 million shares. Got into it with 3.7 million shares on the 3rd. And, of course, this one has not closed below it. We've got a lot of people that are on the Starbucks got to find a vein and get me some Starbucks. But it looks like another one of these that probably not going to pull back significantly, so I probably wouldn't short it. But it looks like it could find $76 fairly quickly. Another one is TCK. This is Tech Resources Limited. We brought this one. This one's right up to its gap. Pretty interesting that we're not seeing any more weakness in this one. Certainly going higher looks like to be a problem, but Tech Resources basically bouncing against and beating against this huge gap down from February 13th, where you had 5.1 million shares. Got a lot of people that would just die to get their cash back anywhere around that 24.5 level, and you can see pushbacks into that. Let me just do a quick check on the, produces natural gas resources in America. Of course, yesterday we saw a huge issue with natural gas. Today, when we look at UNG, still down another 20 cents. Could be worse. Let's look at that chart real quick. We talked yesterday about the seasonalcharts.com folks that were nice enough to put together 17 years of data on natural gas and how this is a huge time for it to be a week. We are back into this lower gap, and if we are just looking at volume, we should have some significant support, at least in what the chart in UNG is showing us, and that's at February 10th low. We came in there with 24 million shares. We're going to have a sum total of 6 out here. So I think you could find that natural gas probably have a floor. Doesn't mean this thing's going to rocket right back up, but kind of a nice little hammer out here today on this move. But probably looking at a trading range around 22.75, which we saw today, and probably some fairly decent risk reward as we look at that range. But my guess is you're probably going to be dead money, probably unless we get a hurricane and or we get to some real heat in the Midwest. The heat in the Midwest probably the more likely of the two to actually happen in the midsummer. So I'd say probably second week of August, maybe third week of August, natural gas will get its at least historic boost in this market. But if you're looking at playing UNG, let's take a quick look at Boyle, the other ETF out here. And this is pretty much the same thing. You got the big gaps happening from around the 17th, the 21st, and the 22nd of January that have set the lows out here. This one's a little tougher to see the volume on. But same kind of hammer candle out here. XME is the mining and metals company. This thing had kind of a major reversal. Very light volume out here, but it would be at least a pause for the miners, if not so much for gold. Gold is up 70 cents today at 1370. I can't say it today. $1,370.70. I'm going to get it through there today. One of the things is volume energy did come off this June 4th low out here and was slightly less than the move back up. So we'll have to keep an eye on that. I wanted to look at a few of the other sectors real quick. Let's take a look at our NASDAQ leaders. And C-Trip looks like it's off 5%. CTRP. This is the usual suspect. I bet this one's doing the exact same thing. Yeah, it's going to close below its 9-day moving average, probably the same thing on the displaced moving average. Just a little cleaner on that one. But look for these things to come back up on and test these moving averages probably over the next few days, maybe even tomorrow. You'd like a close above them, and then the close below them would be the ones that you'd want to probably pull these triggers on, these ones that have been in almost straight line moves up. And I think you could probably make a fairly decent case out here that some of these Chinese stocks are well overdone. and probably time to send it back to get redone. What else did we have? Akamai down 3.5%. AKAM. So we look at that. Another one looks like it's pretty much cracked its moving average. Probably going to see a lot of black boxes tonight, issuing some sell signals. Nice price range in this one. Of course, probably 62 today, down to around $51 where support lies. At least it has a few times. He had a good signal down here on May 7th with a volume being about 3.5 million shares for the 2 times that Akamai was tested at $51.67 and $50.52 on April 29th. Got into those same candles on May 7th with 2.6 million shares and pretty much came back up here to the top, but not finding a lot of love back up here where we need somewhere around 3 or 4 million shares. Got into the high on June 24th with just shy of 2 million shares on Akamai. Netflix is another one down 3.5% off at $16.50 in FLX. Another one that looks like it's cracked. And again, I've been talking about this pattern, and I probably haven't explained it enough. We got a couple of minutes here. But when you see either, let's do the 9-day here because it's going to look a little easier to see on the regular traditional moving average. When you get moves of 10, 15, 20 days above something like a short-term moving average, like a 9-day moving average or a 3x3 displaced moving average, normally what you're going to get is that first close down below it. And you may get a day or two after that. It will pull back up to that average in a market like we have. Try to test and break that average, maybe even close above it a day or two. The next close below it is normally when the wheels come off the wagon, and what I'm watching for in Netflix. So a lot of low-hanging fruit out here as we get to some of these. Wynn Resorts off 3%. We'll take a quick look at that. WINN, and get it in before the break. This thing's in a trading zone, but it looks like it could get back to 193. I don't see a great deal in that one right now. Let's see if there's anything else there. Baidu, I wanted to look at that. BIDU. I think we've got enough time to squeeze in. Same thing. We've had these things bumping along the 9-day moving average or a short-term moving average like a 3x3 displaced moving average. Getting into these things, testing these things on lighter volume. The case of Baidu is going up against the 189.34 high of March 7th. That had 6.7 million shares. Got into it July 2nd. Went above it. Is now closed below it. And now it's closed below the moving average on this thing. So we pretty much have everything we need. It is getting good out there. Let's put it that way. Anyway, you can still have time to give me a call at 877-927-6648. And you can email me at kath@tfnn.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as we come back, going to be an interesting day out here as we we'll go into the closeout here. Let's just take a quick look. I want to update my quote board here just to look sure. Okay. Off 13 points on the S&P cash, 2.3 billion shares. So volume not huge over the last 30 minutes or so, but decent as we watch it. Probably more interesting to see and more important to see how this market closes. Had an email, and it's Larry from Michigan, asking me about UR Energy. URG is the symbol on this. It has a high volume low down here at 10 million shares at $1.01. And I have a feeling that you really need to see that $1.01 tested in this market before I would even think about it. But when it comes down there with light volume, you're probably going to find this thing bottoming out pretty much off, 50% off of its highs not too long ago up here at on March 5th. Another question about in the den to look at Apple. And Apple seems to me to be one of these stocks out here. Also looking a little toppy, but not bad. Certainly a lot more weaker stocks out here. My belief is that Apple and the Apple story is going to be ginned up for the release of the iPhone 6. But what I already know, and everybody else that reads knows, is just how crowded that particular part of the market is, especially with Samsung and its lackluster sales for the latest versions of its Galaxy phones. But it is, probably going to be hard to talk people out of Apple right now. But my guess is that probably better shorts out here, the last leg up, had some decent energy in it, not bad, not great. But I think there's a lot lower hanging fruit out here. If the market comes down, this is probably going to come down. But my guess is this is going to be defended all the way into the fall, where we're probably going to see heavy distribution right before the iPhone really starts shipping, and into its shipping until we find out whether the truth is what Samsung is telling us, which is that high-end superphone part of the smartphone market is very crowded or not. So that was one. Someone's bringing up DDD. I had wanted to short this thing. Unfortunately, everybody and their dog is involved in it. I got a little taste of it on that spike day, but trying to get all my readers into this has been problematic. It's still carrying about a 30% short interest on a lot of these 3D stocks. Just very tough to get any kind of movement in there. And again, it's one of these stocks that can be up or down $5, $7 a day. For a $50 stock, awful hard to trade that in a newsletter. I've wanted to, but my guess is that we're going to see that $43.35 low tested, and probably lower from that April 29th low. And at that point, if we can get back down in the mid-30s, I think we may have gotten enough of the bloom off the rose in these 3D stocks where we might be able to go back in and dip our toes in the water on this thing. But certainly we're seeing these things move back under the moving average. Volume did increase over the last couple of days, but again, not what you would like to see out here, especially going into options expiration. Of course, tomorrow afternoon by 2 o'clock, most of the option market makers will have gone delta neutral. That is, make sure that they can't win or lose any more than the rest of the week. Anyway, Andy's following me, my stalker. And just reminding everybody, between 2 and 3 Eastern, you can always catch me on channel 14, which is Tiger TV on TFNN. And reminding you to sell when you can, not when you have to. See you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.